Hello, everyone. Adam Bergman here, tax attorney and founder of IRA Financial. On today's video, I'm going to be discussing new IRS RMD requirement and distribution rules. And God, the confusion gets even greater. Hard to believe that the IRS took rules that were already kind of confusing and then made them even more confusing. And there was very simple ways, which I'll describe in a little bit, on what they could have done to make the RMD rules easier for everyone to understand. But unfortunately, that doesn't seem to be what's going on. So just to kind of explain the world we are in today, October 2022. So the Secure Act, which was passed in December 2019, changed the RMD age from 70 and a half to 72 years old. Okay. That only applies essentially if you died, received an IRA as a beneficiary after 2020, right? If you were taking RMDs in 2018, 1999, the same rules apply. Nothing changes. You still have to take your RMDs based off your life expectancy, based off a table, uniform life table, which is about 3% a year. Okay, those rules have not changed. So if you're 85 years old now or 82 and you were taking RMDs back before 2020, you're good, right? Nothing changes. But what's changed is that the people that have passed on after 2020, especially non-spousal inherited IRAs, a lot has changed, which we'll go through today. Okay, so there's two ways to look at RMDs. The first is if you are alive and you reach 72, which is a good thing. You essentially have to start taking, and this is for pre-tax IRAs. Roth IRAs, there's no RMDs. It's on your life, if you're alive and you reach 72 and you have a Roth IRA, there's no requirement of distributions, okay? But if you reach the age of 72 after 2020 and you have a pre-tax IRA or SEP IRA, you have to do RMDs or even a 401k. And generally you plug in your age, the value of your retirement account, and this uniform life table, which the IRS provides each year, will tell you how much you have to take out each year in terms of an RMD. Generally, it's about 3%. Okay, not horrible, but generally that's what the number is. And the reason the RMD is there is basically the IRS has said, hey, we let you benefit from the IRA. You got a tax deduction. The funds grew without tax, which is known as tax deferral. Unfortunately, now it's time to pay them back. And they basically are trying to stop legacy wealth transfers, right? So their idea is that, hey, at some point that RMD will deplete the IRA in its entirety. So the first categories of RMD explanations, think about you're alive, you reach the age of 72, IRA is in your name, or if a spouse passes away and you put the IRA in your name, you're alive, you're over 72, you have to continue taking RMDs, assuming it's a pre-tax IRA, based off a life expectancy table. Now, if it's your first year of RMDs, you have to take the RMD by April 1, the year following the year in which you turn 72. Okay. Once that happens, then every year thereafter is December 31. So after the first RMD, you must take subsequent RMDs by December 31 of each year, beginning with the calendar year containing your required beginning date. Okay. When do you turn 72 is obviously, the July 1st. Your 72nd birthday would essentially be, July 1st. The 70 and a half years made it a little bit more confusing. Right now, once you hit 72, that next year by April, you have to take your first RMD, and then every year thereafter, it's 12/31. So here's just a quick example. Let's say your 72nd birthday was July 1st. Let's just say you turned 72 on July 15th, 2019. You must take your first RMD for 2019 by April 1, 2020, right? And then every year thereafter, it's December 31. Okay, so first year is April 1, then it goes to 12/31. So those are pretty simple. Nothing's really changed other than the 70 and a half moving to 72. What happens after that? Okay, Secure Act passes RMD rules and basically spins everything around and says, okay, if you received an IRA from a non-spouse, so an inherited IRA, you basically have 10 years to pull the money out. And there wasn't a lot of fluff on that. It was a very simple statement. There was not a lot of depth to it. So people were confused. Do I have to take a little bit each year? Same amount each year? Can I wait to the 10th year? What about other scenarios? And it didn't have a lot of guidance. And this came out again in December 2019. Okay, so no one really knew what to do. This again is non-spousal inherited IRAs, right? So I just want to be clear. If you are 73 years old, 74, 75, and you're alive, you don't have to worry about the 10-year rule. You still keep taking RMDs based off your life expectancy, assuming you have a pre-tax IRA. The 10-year rule only applies if you receive the IRA from a non-spouse, a brother, sister, aunt, uncle, grandparent, cousin, whatever. Okay, so it's very important to understand the distinction between RMDs on a spouse that it's your IRA or a surviving spouse, right? God forbid your spouse passes and now the IRA is moved to your name. It's basically like the ex-spouse, the deceased spouse didn't exist. The IRA is now in your name and you have to take RMDs based off your age and based off a uniform life expectancy table the IRS provides each year. Now, let's say you received an IRA from a non-spouse, inherited IRA. Now this 10-year rule applies. And the Secure Act didn't, again, as I said, it didn't offer a lot of guidance, okay? It basically said you have 10 years to pull it out, and at that point, the IRA needs to be depleted, okay? So they moved it from 70.5 to 72, and they basically were giving you 10 years to pull the money out. And COVID hits, right? So now 2019 Secure Act passes. It's going to apply to 2020. COVID hits, CARES Act comes in and basically says, okay, you don't have to take RMDs in 21 and 20, right? So people are kind of saved and they don't have to address these rules to say, hey, what do I have to take in terms of an RMD from a non-spouse? Could I not take it and wait to the 10th year? Or do I have to take a pro rata amount every year up until year 10? What's the rules? Well, no one knew the rules. So finally, in March 2022, 2 years after the Secure Act was passed, finally the IRS issues these proposed regs. And they're a mess. God bless the IRS, right? But they're a mess. And basically, this is what they say. And I'm going to kind of summarize them because they're super confusing. And they could have made this a lot easier, and I'll explain why. But this is what they said. They basically said, okay, the 10-year rule is probably going to apply, but before you get to the 10-year rule, there's different rules about RMDs if the owner dies. So let's say the non-spouse dies before 72 or after 72. If you get an IRA from someone who dies before 72, a non-spouse, so let's say a brother, sister, God forbid, and they're 65, what happens? So if the person that is giving you the IRA that you're the beneficiary from dies before the age of 72, you basically have 10 years to pull the money out, okay? So you can wait to the 10th year. You don't have to go pro rata, right? You have more flexibility. You essentially could wait, okay? So that gives you a little bit of comfort, and I'll explain how they added another wrinkle. But just let's say the person that died is within 10 years of you. You essentially have 10 years to pull the money out, okay? You have to just deplete it within 10 years. Now, let's say the person that gives you the IRA, the deceased, is over the age of 72 when they die, and it's non-spouse. You essentially have to pull the funds out. Okay, you have the ability to pull it out over a 10-year period. That's essentially, and it has to be over that period. Okay, so in addition, the account must be fully distributed no later than the end of the 10th year when the 10-year runs, or the beneficiary's life expectancy, which is generally going to be 10 years. Okay, so here's an example. Let's say Ben dies at age 75, and you're within 10 years. So you're let's say you're 64. Keep it simple. Okay, and you essentially want to know when you have to pull the money out. You have the ability to withdraw the amount within that 10-year period. Okay, so they added this 10-year period, and what they also did is they said, okay, we're going to add this terminology called someone who's an eligible designated beneficiary. So if you are the surviving spouse, if you're a minor, or if you're someone who is not more than 10 years younger, okay, than the actual owner, there's different rules for you. So someone who's an eligible designated beneficiary and someone who died before the 72 years old, they have 10 years to pull that money out, or the life expectancy, right? And essentially it's going to be 10 years, right? That's generally going to be the number. So you have two choices. If you are a eligible designated beneficiary and the owner dies before 72, you have either 10 years to pull it out or the life expectancy number, okay? If the person dies after the age of 72, you have to either use the life expectancy of the decedent, person that died, or the life expectancy of you, the beneficiary. So the 10-year rule wouldn't apply if you are a designated beneficiary, right? So there's a bunch of categories here, right? If you're alive and taking RMDs because you're over 72, you use your life expectancy. If it's non-spousal and the person dies before 72, you have 10 years. If the person dies on or after 72, you have 10 years or the life expectancy, whatever's earlier. Okay? Now, if the beneficiary is an eligible designated beneficiary because they're a minor, surviving spouse, or someone who's not more than 10 years younger, then there's different rules. If that person dies before 72, you have 10 years or your life expectancy. If the person dies after 72, then you have life expectancy of the decedent or your life expectancy, right? So as I mentioned, it's super, super confusing. The good news is just last week, the IRS came out and said, okay, these rules are proposed, so we're not going to make you take RMDs in 2022 if you received an inherited IRA in the last 2 years. So if you received an inherited IRA since January 1, 2020, meaning the decedent passed away in the last 2 years, non-spouse, you don't have to take an RMD this year. Why? Because we can't even figure out the rules. We don't even know the rules. Yeah, we released 40 pages of proposed regulations back in March, but we don't even know them. We don't understand them. We're waiting on public comment, and we're even confused. So the good news is you don't have to deal with this now. But the bad news is it's still in flux. And 2.5 years later, they still don't know what the heck is going on. What would have been an easier fix? Very simple. Just say 10 years, 15 years, you have to deplete your IRA. That's it. Okay? All pre-tax IRAs, non-spousal, you have 10 years, 15, whatever the year is, you have to get rid of it. Roth, pre-tax. If it's pre-tax, then they're subject to tax. Roth, no tax. You can take it year by year, a little bit each year, or all at the end, but after X number of years, whatever that number is, 10, 15, whatever they want, it's got to be gone. If you're under 18, once you hit 18 or the adult age, then that 10 years starts, right? I can write those regulations in literally one page. Super easy. Everyone understands them. It gets to the IRS where they want to go in terms of getting the IRAs depleted so they get their money back in terms of taxation. They didn't do it. The 10-year, if you look at the Secure Act, you would think, okay, that's where they take RMDs within 10 years. If it's Roth, it's not taxable. If it's pre-tax, It's likely taxable, and you just can take it out over 10 years. They issue these proposed regs back in March, and now they add all these different elements. This designated beneficiary, then there's different rules if they die, the person that leaves you the IRA dies before 72. If you're a designated beneficiary, you can use life expectancy or 10 years. If you're not an eligible designated beneficiary, then if they die before, you have 10 years. If they die after, you take life expectancy or 10 years, whatever's earlier. So it's a total mess. It's just a total mess. Okay. And as I mentioned, easy workaround is just pick a year, 10 years, 15 years, and just say, hey guys, you got to deplete your IRA by then. That's it. No ifs, whens, whys, and buts. If you're under 18, once you hit 18, you got 10 or 15 years, bang. One page, done. Everyone's can move on. They didn't do it. So I'm just going to recap this again because it is super confusing. And Ken will end on that because I don't want to spend too much time on these confusing rules because they still may change because they're in proposed form. But let me just caveat all this. Start at the top. If you received an inherited IRA in the last 2 years, non-spousal, you don't have to take RMDs from that inherited IRA in 2022 because the rules are still in flux. That being said, if you're taking RMDs, okay, and you're alive, you use your life expectancy, okay? The 10-year rule doesn't apply to you. Keep doing what you're doing, okay? If you have an inherited IRA from a non-spouse, these are the rules. If you are not an eligible designated beneficiary, meaning you're not a minor or you're not someone who's not more than 10 years younger, these are your rules. If the RMD, if the person that passes away and gives you the IRA dies before 72, okay, before the age of 72, you essentially have 10 years, okay? And you can choose how long. You can wait till the 10th year, we think, or you can do it year by year. If the person dies after 72, you have either the life expectancy method or 10 years, whatever's earlier. So probably going to be 10 years, depending on how old you are. Okay, so the only caveat, the only change there is if the person dies after 72, it's life expectancy or 10 years, whatever's less. If the person dies before 72, it's 10 years. Now, let's say you are an eligible designated beneficiary. You're a surviving spouse, you're a child, chronically ill, or you're an individual who is not more than 10 years younger, not more than 10 years younger. Okay, so you're not 20 years younger. Then you are within that group, okay, and you have new rules. So if the person that's giving you the IRA dies before 72, you have the 10-year rule or the life expectancy rule, okay? If the person that dies is over 72, that leaves you the inherited IRA, and you're an eligible designated beneficiary, you have life expectancy of you or the deceased, okay? And then you can figure out, you're generally going to take a longer number and then spread that out. Confusing? Yeah, so am I. Thankfully, I wrote a blog on this, so you can check it out. And obviously, if you're a client of IRA Financial, we will assist you. But just remember, if you got an inherited IRA after January 1, 2020, non-spousal, you don't have to take RMDs in 2022. You didn't either in 21. And then the next question is, let's say you did take the RMD. Couldn't you get a refund? The IRS hasn't addressed that either. So again, I don't know why they waited till October to tell you you didn't have to take RMDs. They probably should have done that back in March when they realized their proposed RMD rules were a mess. But they're still waiting for public forum, or I think that deadline actually just passed. So hopefully we will get finalized RMDs probably in 23. I doubt they'll get them in 22. But it's too bad because there's a simple workaround. Forget about all this life expectancy, 10 years. Just say 10 years or 15 years. Just you got to deplete your IRA, whether you do it year by year when you need it or at the end of the period. It's got to be gone. Okay. Traditional or Roth, non-inherit, non-spousal needs to be gone within X period of years. Bang. One page of regs. That's it. And I just don't understand why they just couldn't make it simple. preached to the IRS about this, but to no avail. And I guess that's what happens when you get a bunch of lawyers that work for the government in a room. They think they got a lot of time on their hands, and they're probably super smart, and they want to cover every angle. But ultimately, I don't think they put themselves in the shoes of someone who's 72 or someone who receives an inherited IRA and is not a tax lawyer or an accountant, and needs to hire a professional and pay them a load of money to understand how the hell these rules work, which is ridiculous. It should be easy. The deceased would not want to put their beneficiaries in that position. It should be a nice legacy where someone leaves a non-spouse some money that they can use for themselves or their families. And it shouldn't be such a puzzle or maze to get through and figure out exactly what the hell you need to do. So hopefully I broke it down for you in this podcast or video, I should say. It's confusing. Again, I'll do it just once more because I want to just make sure everyone understands it. If you got a non-spousal inherited IRA in the last 2 years, don't have to take RMDs in 2020. Okay. If you're alive and you're over 72, you have to keep taking RMDs. Or if you have a spousal IRA that you moved into your IRA and you're alive, over 72, just keep taking your RMDs based off life expectancy. Non-spousal, this is where the rules changed thanks to the Secure Act, which initially was this 10-year rule with not a lot of depth to it. Proposed regs come out in March 22 and say, okay, we're going to confuse you even more. Thank you very much. And we're going to say, okay, if the person that left you the IRA was under 72 when they left you the IRA, when they died, you have 10 years to pull it out. If they died after 72, you have their life expectancy or 10 years, whatever's less, which is probably going to be 10 years. And then the idea is, okay, like, you have 10 years, do you have to take out a little each year? Or can you wait to the end? That's a little bit unclear. Now, new set of rules. If you're an eligible designated beneficiary, spouse, a minor, or an individual who is not more than 10 years younger, so 8 years younger, 7 years younger, whatever, you have new rules. Congratulations. And the new rules are, if the person that leaves you the money is under 72 when they die, you have 10 years or life expectancy. And if they're over 72, you have life expectancy of you or the deceased. More rules, okay? Instead of just saying, you know what, just take 10 or 15 years, deplete it, move on. If you want to do it a little each year or at the end, it's your call. Just be done with it within that period. I think everyone would have accepted that. Everyone would have been okay with it, and we all would have moved on. So there you go. Those are the proposed RMD rules. They will change in some fashion because of the enormous amount of anger and frustration voiced by IRA professionals, the IRA industry, and just the public at large that are saying like, hey, I don't want to have to pay an accountant $500 or $1,000 extra to like figure out my RMDs. I got different IRAs. I have inherited. I have my own IRAs, different rules. What the heck is going on? This is unfair. So hopefully I've added a little bit of clarity. The good news, again, is if you got an inherited IRA in the last 2 years, you don't have to take an RMD in 2022. If you have been doing RMDs before COVID, before the Secure Act, then keep doing what you were doing before. Nothing's changed. It's only changed if you've taken RMDs from non-spousal, or if you've received a non-spousal inherited IRA since January 1st, 2020. You don't have to take RMDs in 2022, and we'll see how these 10-year proposed RMD rules work going forward. But at least we have another year to fight over these rules, and hopefully the IRS hears our frustration and anger and tries to simplify these rules. So thank you, everyone, for watching. I'm sorry these rules are super confusing, but I hope I simplified them and broke them down based off you're alive and over 72, you've received a non-spousal inherited IRA. That person, the rules, if they pass before 72, pass after 72, and then rules if you're an eligible designated beneficiary, like a minor, surviving spouse, or you essentially within 10 years of the person's age when they die, you have basically life expectancy of you or them, which kind of is the same as the rules now, where you kind of use your life expectancy. But why have it different, right? Why use this eligible designated beneficiary? Why have this arbitrary 10 years younger? Like, it's stupid. Just have a simple rule, makes everyone's life easier. If you want to extend it to 15 years or just keep it at 10 years, just have one rule, couple pages of rules and regs. People can get on with their lives. People have better things to do than figure out how these RMDs work. So hope you guys at least understand it as well as I do, because things will change again, but I promise I will provide you updates when the final RMD rules kick in. But as you can see, I'm a tax lawyer. I've read up on these rules. I've read all the proposed regs. They're still confusing. Our industry still has questions, and there's still uncertainty. And that's why the IRS basically said you can pause RMDs, for these type of IRAs, these type of inherited IRAs, if you've received the IRA within the last 2 years, because the rules are still not finalized and still honestly unclear. So that's why I kind of sound unclear, because the IRS is unclear. We're all unclear. It only took them 2.5 years to come up with proposed regs, and they still make no sense. So hopefully they'll get another crack at it soon, and they'll come up with simpler rules that we can all live with. So thanks again for watching. Really appreciate the support, and have a great day. Take care, and see everyone next week.